Hello, this is Josh Belk with the Belk on Business podcast. The last couple podcasts, we've talked about money handling mistakes. So mistakes that we make with handling our money inside of our business. Today, I've kind of just jotted down 6 indicators that there may be financial issues inside of our business. And most of these are relatively basic, but I think it's really good for us in the world of business. I get on a lot of calls, talking to people about doing complex deals or, kind of structure of deals. How do we go this direction to make money, et cetera. And that's all good and great. Sometimes it's the fun stuff. Marketing can be enjoyable, and kind of coming up with creative ways to make money can be very interesting. But I think that kind of just taking a step back at times and just taking a look and saying, okay, wait, how can I tell in just some basic areas whether or not my business may have some sort of a financial hiccup here or there that may need to be addressed. And so I jotted down 6. Of course, it's not at all, as with most of these podcasts and most podcasts in general, not at all an inclusive type of a conversation, but just a few items just to prompt some thought. So indicators that there may be some financial issues inside of your business. And so first of all, this is almost doesn't need to be said, but I think one big indicator is if you simply cannot pay your bills on time. And this is true whether it's personal finance or business finance. I know, for example, that a client, even if I were never to look into their books or their financials, I know that a client is having a difficult time, or there's an issue that I may be able to, which there may be an opportunity for there. But when I hear from a client, can we have some extra time to pay our bills? And so usually that would get followed up by, is there something I can help you with, and that type of thing, because that's the seat we sit in with our clients, is trying to help them maneuver through things. So maybe a situation to where maybe they're slow on receivables, or maybe they're an expansion project, a little bit short on cash, and that's better information and good information, and a better reason than we simply just don't have the cash, we're it's slow right now, these types of things. So that is definitely maybe a primary indicator, along with I think maybe one other one here that I'll mention that you're struggling. It may just be a cash flow shortage at the time, that type of thing. You're focusing on one really big project, and you've got about 2 weeks before they send you the next draw, whatever the case may be, and that's very understandable. But just kind of the ongoing ability to I just hope that the money comes in this week so I can get the bills paid. That is, I think, really the first one of the first indicators in regards to there's probably a financial issue inside of your business, and then resolving that, and the solution to that can be varied. So you're really going to kind of, if you don't know the answer to that, then you may want to lean into someone to kind of take a look at things and say, what we need to do. Is it operational? Is it efficiency issues? Is it cash flow timing issues, or is there a foundational structural issue inside of the business that kind of look at it and say, the model is just simply broken, or the idea simply isn't one that is monetizable at this time, something to that effect. So first of all, your inability to pay your bills on time. Secondly, simply ignoring your budget or not making proper revision to the budget. And so that's another thing that many times that we see. So a business will sit down and go through the process of setting up a budget, but things get a little tight, and it's simply just like putting your head in the sand. I don't want to look at it. I don't want to see my budgets to actuals. I don't want to see, I just don't want to look at it. And so just simply ignoring it, or knowing that, something has fundamentally changed. There's some sort of the business just isn't monetizing in the same way. And instead of going back, revising the budget, making the necessary changes inside the budget, they just simply don't do it. Okay, so just ignoring it, or simply not making necessary revisions. That's number 2. Thirdly, not having any savings at all for whether it's and we talked about this, I think, in the last podcast or two, but just simply not having that savings bucket. So, people talk about setting up accounts, that type of thing, separate bank accounts and moving things around, and that's all fine and good. But you really should have somewhere a stash of some cash in case you run into a dry season. As an accounting firm owner, I know that there are particular months of the year that are slower than other months of the year. Some of our work is seasonal. And so understanding that, I need to have some money in savings to get us through those months that I know we're not going to hit profit. Okay, simply they're just slower months as far as revenue generation, and so I know that I need to put money over here into savings to get me through that time frame. Okay, so that needs to be there, but also for any sort of opportunities, expansion, those types of things, you should have a savings account there as well. So kind of for duplicitous reasons. So not having savings for whether it may be an emergency, for cash flow purposes, and for growth. Fourth, next, debt liabilities increasing due to an inability to maintain operating expenses. And this is one where you're simply not able to keep your doors open. So operationally, you're struggling. And you go through and you obtain debt, or you pull money from some other place that's going to hurt you someplace else. And so if you look at your balance sheet and you see your liabilities going up, and this is mainly going to be unsecured. So if you're in real estate, something like that, you almost have to kind of split your balance sheet into two sections to really kind of take a look at this. But or understanding the analytics a little bit, and this is an area, of course, where we can help. But it's kind of one of those things. If you're looking at kind of your unsecured liabilities, that money that you use to essentially keep your doors open, that type of thing, if that number is growing, or you're having to go, especially if you have to go out and your credit card balances are going up, or you're securing unsecured, high risk, high interest rate type loans, that will quickly choke your business, choke the air right out of your business. And I would say that for a number of our clients that we've seen go out of business, unfortunately, I think a majority of them, this is one area where they simply just say, okay, I'm just going to get cash wherever I can to keep my doors open, and eventually they just cannot keep up with the debt service on it. So if your debt or your liabilities are increasing, and this may mean you're going to a friend or a family member or something to bring money in, whatever the case may be, if that number is growing, okay, that is a sign that there is a financial issue inside of your business. Next, and this is one that I see a knee-jerk reaction on quite often, and it's one that can really get you into quite a bit of trouble with the IRS, and that is simply owner shifting to simply paying himself or herself through draws instead of payroll. So if you have an entity structure that requires you to take payroll, such as an S corp primarily, and you just stop, I'm just going to take draws out of the business. I'm just going to stop paying payroll. Or, and I think even worse is you decide that, I'm paying these people as employees. I don't want to deal with the payroll taxes anymore. They can deal with it. I'm just going to pay them as contractors. Okay, if you're doing one or the other or both, okay, there's definitely a financial issue inside of your business. Okay, so just be aware of that. And then lastly, for today, number 6, focusing only on profit. And what I mean by that primarily is you're focusing all on profit, and you're neglecting investing in your people, in your culture, in your purpose, in your impact. Okay, so in those areas, are you investing? And this isn't just monetarily. This becomes a time element too. Okay, so if you're simply just so busy, and everyone's so busy inside the business that the purpose gets neglected outside of just simply making money, okay, then there is actually an issue inside of your business. And you say, well, I don't think that's financial. Well, I promise you in the mid to long term, it will become a financial issue, okay, because you're going to lose sight of why you're doing what you're doing. So if you're focusing only on profit and not focusing on investing in your culture, investing in your team, investing in your impact, investing in your purpose, okay, so if you're not investing in those areas, then there is probably some sort of financial issue inside of your business that needs to be addressed. Briefer podcast today. I appreciate you taking a few moments to listen in. This is Josh Belk with the Belk on Business podcast. Have a wonderful day.